Coming to you from sunny Orlando, Florida, welcome to the Paperstac Podcast, where we cover current topics in the note industry, give you tactics for your note business, and talk with industry leaders to make you a better note investor. And now, your hosts, Brett Berkey and Rick Allen.
I am Brett, and I'm here with TJ Osterman.
Thanks for having me, Brett.
Yeah.
I'm sitting in for Richard Allen.
That's right, yeah. So he is the fourth member of the Paperstac crew. He was the co-founder with one of the co-founders with Rick and I and Mike. They hedged the idea in their head of what they wanted, and later,
amazing.
Mike and I helped with other stuff, but we all gave a leg, and all came together. So Rick is out of town this week. He is on vacation for Thanksgiving, and so me and TJ have come down to the office to shoot some videos.
It's a beautiful studio in here.
Isn't it nice?
You got it going on.
Yeah. But one of the things I always like when I hang out with TJ is that if you get him on a subject about what he's studying in terms of what he's always planning ahead, looking at markets, because he needs to, because he's on the side of the MWM where he's the CEO of that, where he has to make plans for what could happen because he's managing a lot of funds. He's always doing the research of projections and running projection models on if the market goes this way and if this happens, this is what we might be in store for. And I don't ever dabble in that because it's just not my world. And I know Rick's doing more of the other stuff, maybe some on Paperstac, and if he's doing other things and negotiating things. So TJ has a depth of knowledge of just projections of where the market could be by maybe Q2 2021. And so I just want to dive into a little bit about, for the investors that are listening to this, I know that you do all that research all the time. You're always looking at what's the future of this. And I'd like to know, where do you see where we're currently at now? Kind of step back from what we were talking about just a little bit at lunch, where you're starting to say, like, the unemployment of 12 million people's insurance is going to run out the day after Christmas. That's a shitty Christmas present, though.
I've heard this, and so you can look it up as well and do your own research. Like I always say, as like Brett said, I love doing research. I'm a research geek, but I just love to learn. So yeah, after Christmas, 12 million people will lose their unemployment insurance. And right now, there's not a real plan to keep a stimulus package put together. It's just not going to happen at the end of it. So what's going to happen with 12 million people? A lot of those people, obviously, they're collecting unemployment insurance because they're supposed to be unemployed. They don't have jobs. So they might be renting.
Yep.
So what's the systemic effects when people hear that and they're investors, like smaller investors like us? And a lot of them are like, well, it doesn't affect us. The systemic effects are huge on this, okay? Because you have to start to think 12 million people not able to pay their mortgage or their rent, okay? Now, if they're not able to pay their rent, okay, who owns the home? An investor, a landlord, who is generally, a lot of the times, unless they own it outright, they have a mortgage to pay, which they rely
on the bank,
on the rent from the renter to be able to pay that. Mm-hmm. And so if they're not able to pay that, so now the bank who's holding the mortgage for the landlord that's renting to the renters. Mm-hmm. So that's going to go all the way back. And now that bank is going to have a non-performing asset on their books. So the effect is a lot is going to go on, right? We don't know which direction things are going to go, but the scary thing is that are all those people going to go out? Are they going to be homeless? Are they going to kick them out?
Scary.
What's going to happen? And that's why I really believe in 2021 and for the future, people really need to start to think with that idea in mind, not just when you're investing, how much money I can make for myself, but how can we help so this doesn't happen? Because look, if you're a taxpayer, it affects you. Yep. Because if the government comes and bails out again, which we're probably going to need, right? That's money from taxpayers that we're using. So that's the whole idea about, it's a scary thought. It's true that there's 12 million going to lose it. I hope it doesn't fall out as much, but that's definitely something to look at. Now, as much as there is bad with it.
One thing being that you brought up, this was December 26th.
Yeah.
The one thing that was like, went off in my head, I was like, wow, the timing's pretty bad when the rent moratorium is up at the beginning of the new year. So 4 days before.
It's all done.
What's that?
Yeah, the moratoriums.
That's what I'm saying. It's like,
exactly.
So if they haven't been able to pay much or they've been faulty in their payments, the landlord's just been waiting. Now they're going to be unemployed, or they already might be unemployed, but they might not be getting the money for it, but at least they have a roof over their head. Guess what? 4 days later, Happy New Year. Their they could be in a world of hurt. That's just a terrible situation.
It is. And you can't blame anybody because everybody's business model is different. Just because Money with Meaning Fund is we connect to money and meaning and we try to do the right value-driven decision. Big institutions, that's just not how they were built. That's not what they're supposed to do. It's not in their investment criteria. Their job is to exit and get out of that position and get as much money back on them. You're going to see, I would say, an increase in foreclosures. And that's all the reason why we as a fund and how much Paperstac has helped to facilitate these ones that we can help with, right? It's a huge elephant. We're going to take one bite at a time, and we can actually help 1 or 2 or 10 or 20, and that helps. So everybody out there that's listening to this, you can think about that as well. And it's a nice opportunity, if you are a mortgage note investor, to start to look at, wow, what a powerful position I have to control somebody's living. And now I can use that power for good, or I can use it for evil. But
that's scary. It's scary if they use it the wrong way.
But the wrong way to them, to me, is not the wrong way to them.
Yeah.
Right? So there is all I'm saying is that people just need to, I'm not telling them what to do or how to do it. It's just look at something from a different angle and then make your decision based off of that. You want all the information and then make a decision. You're going to add a couple other things like, can I help? How is this going to help the community? Or how is this going to do this? Or what's the effect on this?
Imagine these people are unemployed. They're not paying taxes so now
local taxes are going
to get affected. That's going to affect how they fund the schools, and schools are already in a world of hurt, and police and the roads. And so,
are you new to the mortgage note industry? Have you been wanting to learn the step-by-step process to purchase your first mortgage note? Well, you're in luck. We've convinced our CEO, Rick Allen, to break down everything he knows about mortgage note investing. Through a series of 50 videos, you'll get everything from start to finish of where to purchase notes, how to purchase notes, and all of Rick's investing techniques he has developed over the many years. From performing note tactics to non-performing notes, Rick gives you everything he knows about investing. Bonuses include our glossary of industry terms, Rick's own proprietary calculators he created to evaluate notes, discounts from our partners, our Rolodex of vendors, a private Facebook group, along with a lot more. We've packed so much content into the Academy to take you from beginner to expert in no time. To learn more about the Academy, go to academy.paperstac.com/welcome. Again, that is academy.paperstac.com/welcome.
It turns into a mess, and so that is scary.
Yeah, and then the landlord's not being able to get rent. They're not going to be able to do more deals.
Yeah.
Not rehab homes. Home Depot relies on people really rehabbing homes to make a lot of money.
Yeah.
So, yeah, I mean, like I said, it's just stuff that we're seeing. It's a scary situation, but I think we're in the right place at the right time when it comes to lending a hand and potentially doing some good work.
Yeah, so I know this has turned into a kind of a scary topic, but talk to me as well, because we're sitting here today is it's the day before Thanksgiving, whichever day it is, the 24th?
24th, I think.
24th? I got to check my face.
25th.
25th, okay. Yeah, and the one thing we just found out yesterday on the 24th is that the stock market hit 30,000. Holy crap, 30,000. But it's like when we were talking about it too, you're like, yeah, but you saw a different angle that I was not seeing because my family's very heavy stock focused. My parents, my grandfather was a stockbroker. My mom was a day trader. My dad, he just likes dividends. He's a dividend kind of guy. He likes a dividend. My brother's an
derivatives.
He likes dividends.
Oh, he likes to get paid dividends.
Dividends. He bases all his investments off getting dividends every month.
Gotcha, yeah.
And so
I'm not an expert in the stock market. I just know certain things that affect it.
Oh, no. Yeah. He's a dividend guy. My brother's actually manages lots of money he works in Fidelity. And so it's all stocks for dinner. What stock do we eat for dinner? And it's that they would talk. And so I know that, but then you came at a different angle talking about how it's been propped up to 30,000. And I want to learn more about that because tomorrow's Thanksgiving and I'm sure I'm going to have some beers with my brothers and I want to bring it up.
Yeah, it's a weird thing that's going on. You generally see companies' earnings will come out and that'll affect stock price. As of late, if you just take 5 or 6 stocks, Facebook, Amazon, Netflix, Google, Tesla, take those away, and those are the ones that are propping up the entire market. And the thing about it is that you've heard about this quantitative easing, about the central banks helping support everything. They're not so much directly investing in these equities into public companies because in their mandate, they're not supposed to do that. But what they are doing is they are buying ETFs, right?
Okay.
Which the bond side of the ETF, right? Where it's corporate bonds. So what happens is like a Facebook, right? Sitting on billions of cash will put bonds out to the market to sell, right? The Fed will buy those, give Facebook more money. Facebook takes that money and buys their own stocks. So they're doing they're doing buybacks. Everybody's heard about all these companies making all this money, Boeing and all that. Why didn't they sit on a rainy day? Why didn't they keep some of the billions, right? And help potentially for a downward trend. So indirectly, the market is being propped up from quantitative easing. The central bank, right, is pumping money into and buying all of this debt from other companies. And those companies then are utilizing that money for their own benefit to buy back stocks. So all I'm saying is this, right? So when you see the biggest buyer, and they are starting to pull back now, the Fed, the biggest buyer as of late, when that goes away, okay, what does it look like then? What does the market look like then? Do things start to drop because people are going to sell, but nobody's going to be buying, right? I'm not an expert in this stuff. I really like to understand. You follow the money to the beginning, and where you need to follow the money to is what's happening at the central bank level, the Federal Reserve, and how much what they've been doing affects the market and the prices that they're at right now. You can go onto the Fed's website. It's a great place to go to get all of its public information too, by the way. It's just not that easy to find. But I recommend anybody to really do that so you can understand. And the biggest influx has been Robinhood investors, right? Retail investors, people that invest in MWM fund have an opportunity now for the first time ever to invest in securities on Robinhood. I can be a day trader and I don't even know what I'm doing.
Yeah.
And a lot of them have been doing this because of the pandemic, because of boredom, because of something to do. They're at home. The statistics are off the charts for how many people have come on and are trading in these equity positions now.
Aren't they doing fractional now?
Probably, yes. You can do anything on Robinhood.
I know with Acorns and stuff like that, you can do fractional
stocks and everything like that.
Fidelity's getting into fractional stocks.
Right.
Because my brother, every time that I find some really cool financial thing, I always run it by him because I'm all in on Fidelity. I got my money over there, and that's for even my banking, my card that I buy gas with is all Fidelity. So when it's, hey, check out Acorns, it has fractional banking and automatic investment into stocks. And there's, Travis, do we have that? Is that there somewhere? Because it's huge.
Yeah.
Website. Yeah, you just got to go here. Cool. What about Betterment? Do you guys have a Betterment? And yeah, we have a Betterment. Robo-advisors and all that stuff. It's right here. So it's, oh, okay, cool. So everyone's getting in on the fractional stuff.
Yeah, and it's almost like the derivatives, that's almost a derivative of another equity of a stock. And the derivatives are the scary things because there's derivatives on derivatives. Derivatives are all over the place. People are gambling on everything. On an entire market, they're gambling whether it goes up or down. So the scary thing is that a lot of the retail investors are trading on headlines, is what professional day traders generally do, but they're well conditioned and they understand what a headline is to do to move the market and what it means to not move the market. A lot of these unsophisticated retail investors are trading on headlines that really are not true. And these are BS headlines that are put out there to really manipulate the market. Anyways, without going too much into that, it's a new day and age. There needs to be certain options and opportunities for all of this new type of retail investor coming on board. And you have to be diversified, right? Go and trade your stocks, but then put something into real assets, like mortgage notes, like real estate. And the reason being for that is you don't want to be in any cash positions right now. A cash position is your money's in the savings account. I talked to some person the other day. They're like, I have $150,000 in my checking account. I'm like, oh my goodness, that's scary. The reason why it's scary to me is because of inflation. We all know what inflation does, right? It makes your money worth less. Now, when the Fed and central bank pumps more money into the system, it makes your dollar worth less. I would be able to buy a pizza today for $1. Next year, I'm only buy half of that. Now, if my money was in the asset, the pizza, and not in cash,
it goes up.
It rises with it. So that's why I'm telling a lot of investors, get out of your cash positions. It's nice to have a little bit of something in there, but get into some different stuff like mortgage notes or real estate, because it's just a better way to diversify and deal with the inflation that's going to occur.
So you think it's definitely going to occur?
They shoot for 2% and they never hit it every year.
But aren't they going to keep rates low though still? I saw somebody got a loan that I saw that was 0.9.
Yeah, cheap money is going to be extremely cheap for a long time to come, which is basically saying the big institutions are able to borrow at such low rates that they are just going to borrow as much as they can, and then they're going to buy back a lot of their own stock. See, so it doesn't really filter. It doesn't the trickle down economics. I don't believe it. I don't believe in trickle down economics. It's the people that have access to that credit market of super cheap money and they're keeping themselves alive when a lot of these companies should be rinsed out through this cycle, right? But they're calling them zombie companies now because they're getting all of this bailout money, right? Billions of dollars of bailout money to keep them alive. That is unsustainable because they're not able to pay their credits, right? So these big institutions have all this money that they have to pay, that's debt. And so they're not able to meet that yet. So it's basically taking that cycle of where those companies should have been washed out into keeping them alive for longer. And it's just, there's no point.
And this thing that sucks is we're keeping them alive, right? Because this is our taxpayers.
Yeah. The people are like, I don't care. It doesn't affect me. The government doesn't sell widgets to make money.
No.
They collect taxes.
No.
So every time that a big institution sells $1 billion of bonds, corporate bonds, and the Fed buys them, right? That money that they're buying with is basically your money, because now when that company that they just gave all this money to defaults on that debt, who's going to pay that $1 trillion back to the Fed, right? We are. We're going to be the ones paying it back, not the corporation.
Yeah, because we're going to pay more taxes.
We're the ones that are going to be paying all this debt back. Really, is the kind of the crazy thing to think about.
So, any of that, I know we went very far on the deep on the research side of all that, like the debts and the different thing. Like any way any of that will affect our market of mortgage notes.
Here's the most important thing: when people ask me, "Do interest rates affect your business?" Right? No, they don't at all, because what we do is what really affects our business is the cost of our money compared to what we can sell it for, right? So there's that delta in between, right? So if our money's costing us 5% to buy all these assets, right? We need to sell it at 10% and we make the 5% in between, right? So so interest rates don't matter operating in the in-between phases, right? Of how much money costs compared to how much actually we're able to get in and out of this stuff. And we're able to price that up front. So interest rates don't affect us as much.
Wouldn't it affect you if the interest rates rose too much though?
In what way?
If you had to borrow at 6% or 8%, do you think you could turn around and make a big spread between what you could get cash for and then what you can sell it for?
Yeah.
Really?
Yeah, absolutely. 6 and 8% is cheap money.
I know, but I'm not talking like hard money loans. I'm talking like, but I guess still.
Yeah, no, it's just, you're just going to have to price in that up front, right? Mm-hmm. Oh, you're going to make the in-between. And if it gets too tight where you don't have to always leverage or borrow money to buy the stuff. But for instance, our fund, we have a hurdle rate that we have to meet to our investors. That's what our money costs. But then again, we can borrow money at a certain rate. That means the debt service needs to get paid down. What's left over is ours.
Yeah.
So it's okay if the interest rates rise or anything, it doesn't matter. If we're borrowing at 6% and we're set and the debt service is all covered, and then it's throwing off $5,000 a month, right? After we pay all of our debts all of our loans that we're paying on. And then after that, it starts to compress because now our money costs 10% or 12%. Mm-hmm. You just have to build it up front, ask for more of a discount up front. And it's a lot more complicated, but that kind of gives an idea of how we are insulated from the interest rate bouncing all over the place. And cheaper money out there really only affects we won't see it.
No.
It's all the big guys, big corporations, big entities that have access to that cheap money to keep the economy.
Where do you have to be able to have access to cheap money like that?
I don't know. If anybody knows, let me know.
Oh, really?
No, they're able to raise money so easily. I believe Facebook is sitting on something like, I forget how many billions or even more in cash, yet they're borrowing money.
Why? Why would they do that? Because it's cheap.
1%. So it's basically free money after inflation of 2%. So why wouldn't they borrow money and sit on that cash? And so that's the thing, is that with that cheap money, and then they're using that money to buy back stocks, let's say. So what's going on with the market? What's actually, is it all buyers, all people really trading this stock because of the valuation, because they just made all this money? But everybody's been saying as of late, wait, you've continuously lost money, yet your stock is going up.
Yeah.
So they're like, I don't know what's going on. I'm sure your brother, your parents are like, how do you evaluate a company now? If you just don't evaluate a company based on earnings, what are you evaluating it on? So it brings a good point of like,
my dad's
future.
he likes Tesla's car, but he hates the stock. And he's always talking about that, just like the value, he's like, it's not there. I don't understand how the hell this could be so high. People are all hyped up on it. I'm like, maybe they like Elon Musk, or they like the mission.
Well, they like the mission, and
Yeah,
they
but
like the future. He's going to be disrupting. So you're investing in that idea of what it's going to bring. And I think that's important. But for those people out there that are just following the market and investing in the market, to analyze a company before you invest in it, you look at the financials. If they're losing $1 billion a quarter, how do you say, okay, I'm going to invest in that? But that's what a lot of these big technology companies have been doing. They're losing money, yet their stock is going up. Why? Because of cheap money, buying back stock, increasing the prices. Yeah. But what I did want to touch on real quick is the housing market.
Yeah.
What we're seeing, right? Why prices have been going up.
Okay.
There's literally no homes. There's 1.5 months supply of homes out there. So sellers, I wrote here, are really having a day, the greatest time ever, because it's like they're really defining what shooting fish in a barrel is all about.
Right.
You're putting something up for sale, and in 30 days, that's the average time on market now, 30 days,
Wow.
and you're getting full price offers on stuff, right? So what does it cost? What does higher priced real estate, what does it cost? What do you think?
Higher and higher prices?
Yeah. What does that do to the supply and demand?
Probably increase a little bit of the supply, but at the same time, if you sell your house, you got to buy a house. Then you're right back in the same circle, which I think is funky.
Yeah.
I've looked at it and like our price, we sold our house right now, we'd walk away pretty nice, but at the same time, I would, but I'd have to find another house. And then what I could probably get would probably be, I don't know, it'd be nice, but it's like, well, what point do you stop? If there's not the inventory, you don't want to buy it this high. You want to sell this high, but then you'd be stuck having to buy unless I don't know. We have friends that right now are they're literally doing this. They're selling their house at the high right now, and they're getting a trailer, and they're going to travel until things calm down. They think it's going to slow down at the end of next year, and then they're going to build. So they're actually going to build. They're buying land and they're going to build. Now that way they can price in their own stuff because they're building it. They're not buying a house that's already been designed and developed by somebody else. But that's one option if you wanted to get all your equity now and then hold on to it. And
there's a lot of unique ways of doing that as well. There's other companies out there too. If you want to reach out, we can share those companies with you, because there's some really interesting ways of not giving up all of your equity, but still pulling some of that out. But so really what it matters, right, is supply and demand, right? What drives those prices is there is 1.5 months supply, and there are more buyers than ever with really cheap money. So what is that going to do to prices?
You're raising more.
Continue, because it's going to, and who is that going to price out?
Middle class
And lower middle class, because they're not going to be able to afford that.
Yeah.
And so it's going to continue to go up and up. So really you're becoming, okay, we have a problem with affordable housing, yet prices are going through the roof. What's going to happen? So it's an interesting thing, but and really it depends how high they will go, really depends on how long low interest rates for borrowing money to buy a home will be.
Well, what didn't the Fed, they swore to us that they wouldn't raise it for the next 2 or 3 years. That was something that I think they said just recently, because I'm looking at totally in terms of housing stuff. I'm looking at changing my mortgage into a first position HELOC. I'm doing it now. I'm going to be finished with it probably at the end of this year. And the whole reason for that is that being able to have access to capital.
Yeah.
If that's something you want to have, if I can have first position HELOC, I don't have an amortized loan anymore. I have a simple interest loan. And so I can now, if I just pay, what it is, and I start paying it down, and that equity, if I needed to borrow equity for whatever, I don't have to go refinance my house and have to have a structure new loan on that basis. It's a line of credit. Just borrow
Mhm.
against it, pay it back. Borrow against it, pay it back. It's a different method, but what's the point of that?
It's a good way. The point of that is that people are always, if you're...
The reason why I was doing it is because the interest rate is going to stay low. Because it's a variable rate.
Yeah. Also, you want to access some money to invest. That's just
But
locked up or
the variable rate was the one thing I was like, I don't know about this because if interest rates rise too far, but I know, okay, well, we have at least the next couple of years to where they won't rise. And if I pay down my mortgage a lot in that time frame, and then we started to see like start to creep, I could just get a new mortgage and then be locked into something fixed, but still had not paid an amortized loan and just been paying interest because I'm still a couple of years in. So it's still really just interest instead of simple interest rate. You know what I mean?
And I think the whole point of us rambling on right now about stuff.
We didn't even have coffee.
Is because what can we do from our position to help create more housing, affordable housing? What can you do? And it brings us to a really interesting point. Builders can't build enough to fill the deficit needed for housing right now. They just cannot build enough, nor will they. In a mortgage note business, mortgage note investors, it's a very small niche. We get an inventory of mortgage notes attached to homes. These are generally affordable homes. We see thousands of them that have been sitting there, sometimes vacant, for 3 to 4 to 5 years. Now, is that an affordable home? That one's that's sitting there and nobody wants to take ownership of it, so they don't release it to the general public to sell. So there's millions of homes like that. Us mortgage note investors have an opportunity out there to revive those, recycle the current inventory that we have, work with the builders on that, and build it up from there as well. Because they're always saying, we need to build more, we need to build more, we need to build more. It's today's day and age is about recycling what we already have. We have too much, pardon my French, shit. We got too much stuff, right? And so the thing is, we have so many affordable houses out there that we see personally that are just sitting there and doing nothing, right? So the big thing out there for all of you, what Money with Meaning Fund is all about and Paperstac is helping facilitate, right? Is getting these homes that would generally just be trade bait, meaning nobody's really taking ownerships of these. Nobody's reaching out to the borrowers.
Trade baits.
Right. They're basically these big institutions are saying, I'll sell you these 100,000 loans, but you got to take these 1,000 with it. Okay. And they'll say, okay. And they don't want to put any money and resources in it. So they sit there and I call it debt purgatory, right? They're just stuck in debt purgatory. What we do is we come there and say, wow, there's 1,000 homes. All you need to do, we got them at a big discount, is go in there, pay the taxes, get it fixed up, and release it as affordable housing. Now, we're doing that work, right? And a big thing is I wrote something here that I really want everybody to think on before we leave and end this, okay? We all know, I don't know if people know about infrastructure in our country, right? Infrastructure, bridges, all that is like at the worst ever, right? You've heard it. We're not putting money into that. So infrastructure deals are great investments. You attract a lot of investors that would generally not invest in houses or real estate. If we included housing as infrastructure, how is housing not infrastructure? Yeah. Here's a definition of infrastructure: the basic physical structures essential to the operation of a society.
Yeah.
Why does it even matter that we should have housing as infrastructure? Because there are so many more good money deals out there that can help with these communities, that can help rebuild, that can help with housing. Because when it's considered an infrastructure investment, like I just told you, you have access to more patient capital. People that invest in infrastructure, they don't want their money back in a day or a week or a month or a year. They're like 15 years. They understand infrastructure takes a long time. So you get more patient capital into a market that needs it, affordable housing, just by saying this is an infrastructure investment. You could have tax benefits because of this. So really, the vacant towns and neighborhoods that need to be turned back on, let's focus our attention on that instead of so much on how much we can build. But let's focus our attention in on, here's a whole bunch of neighborhoods with a bunch of affordable housing out there. Money with Meaning Fund is doing its part. Everybody out there that has the opportunity to do it can play a role in this as well. And you can make a lot of money and you can do some really good too, right? Now, the one thing I did want to bring up here, now, unlike most European countries, the Treasury does not consider housing to be part of its national infrastructure. This means we have little national oversight of our housing needs and no coherent national plan for new development.
Kind of sucks.
Yeah. Now, if you put infrastructure on it, now you have people, now they're wondering, why are we having an affordable housing crisis? Why are they still they were working and they still don't have a home, or not everybody's a deadbeat. Some people just don't have that opportunity. And it really starts at the root of there's no coherent national plan for this. It's because there's that one part of society that really gets left behind and it's underserved. That's the market that we really strive to add more value to. And as an investor, you're always looking to buy something at a good deal, at a discount, at a good value, and then you can add value to it. You can unlock value that others weren't able to see. And so that's the beautiful thing about mortgage notes. You're getting these deals that are in local communities that are inexpensive homes, but you have the opportunity to go in there, make it more beautiful, get it back on the market. There's so many cool things to do. Like I said, Paperstac MWM Fund, we're growing our base. We have 60 plus investors right now. Okay.
So for MWM Fund.
For MWM Fund, we have 60 plus investors, right? And all those people that I constantly am trying to get in front of and letting them know this is the opportunity that we have to build this brand and really in 10 years look back and say, look what we've done. And you guys were a part of it, right? And want to come along with us and really connect money with meaning. So we're really asking anybody, right? Go on to Paperstac. Check it out. If you're a real estate investor, go on there. Even if you don't know anything about mortgage notes, we're available. You can reach out to us and ask us because we are real estate investors. It's a great way to get more real estate.
Yep.
If you want to be passive, come to an investment fund like Money with Meaning, where you can put your money in, you can learn while you earn, because we're going to be telling you newsletters. We're going to be going up to date with different things that we've been doing, why we bought this pool and what have you. But we'd love to connect with anybody.
Yeah, just follow up and reach out to TJ at mwmfund.com or...
I'll give you Brett's personal number here. Let me...
Yeah.
No, but really, do you think that the infrastructure, how housing is not part of infrastructure?
Yeah,
it doesn't make sense to me.
No.
If somebody could bring that to me and send me an email, I don't understand that. It just doesn't make sense.
Yeah.
Why is that?
I don't know. But yeah, I think we're hitting the 30-minute time range where we always try to keep these things to under 30 minutes. If you haven't subscribed to this podcast yet, please do. Thanks, TJ. I appreciate you coming on. Yeah, that was a lot to unpack, man. See, that's what I'm saying. You just get them on a roll. There was this one time on this last story. There was one time that it was a day like this. It was just me and TJ. And it's going. And I remember we were at lunch. And we were at Red Robin.
I love their burgers.
And man, unlimited fries. Yeah. And so he goes, so what do you think, Brett? I was like, I think I haven't said a word since I add to the office this morning. You've talked the entire time. I was like, I love it. It's just fun. You can just get him going. He's into it.
I'm passionate.
You're very passionate.
I'm passionate because it's really needed.
That's very true. Well, good stuff. We'll see you on the next podcast. Hey, have a happy Thanksgiving weekend because this will be out Friday. Yeah. Enjoy your weekend and talk to you soon.
God bless.
God bless.